Hey, this is Trader Travis, and I welcome you to another weekly recap. Today I have my son Noah with me. He wanted to say hi. And since I'm going to cover my personal trades as usual, everything we're sharing is for educational, informational purposes only. So what I want to do first is talk about the general markets. Honestly, I'm nervous. I have no proof, but I do have just kind of a weird intuitive feeling like the market is setting us up for a setup here, like it's going to set us up for a disappointment. It's raged higher, maybe 13, 16% since the bottom here that happened in about end of December. And I feel like it's going to fall here soon. But again, I have no proof. There's nothing on the chart saying that the market is going to fall. And I know there's at least one person trading what they think. They think that the market is coming up on the 200-day moving average, is going to act as support and probably fall. It could happen, right? But that's what they think, and they're buying a bunch of put options so they can make money. But what if the market keeps going up? And that's a problem. I've learned over the years to trade what I see, not what I think I'm going to see, to just get in alignment with the market, to kind of listen to the story it's telling you, right? It's telling us, hey, I want to go up higher. That's the way I'm trading. And if it does fall, then yes, I can start looking for stocks that make money when stocks fall. But right now, it's going up. So that's which way I'm trading, bullishly. And with that being said, I do have some stocks right here because I pulled up, let's pull up Market Club. Market Club, for those who are Market Club option members, they created a custom option scan for us right here on their homepage, top options. If you pull that up, all these stocks right here are satisfied our Market Club options blueprint. These are good stocks to potentially trade options on. Not all of them, because you still have to run through our filtering process. But what I did was run through that filtering process, and I found a list of stocks here. There's a couple other things you would have to do, like look at that option chain and see if you can afford the options or if they have high open interest. But these 6 up here satisfy our Market Club stocks. The bottom 2 are stocks I found with a Success Academy template we teach. The PR template, also called the 10X Growth Strategy template. So keep your eye on these 8 stocks in the month of February because our template said they most likely will go up higher. Now, with that being said, I don't have Peter here. If you notice, Peter's not here. Peter couldn't make it this week, so it's just me. So I'm just going to make this quick and go ahead and show you my trades. I've already covered the general market, what I think. Honestly, I think the market is going to fall here soon, but I have no proof. But as soon as we get a signal like close below moving average, or we get a Market Club trade triangle, because that's the beautiful thing about Market Club. Let's pull up Market Club one more time here. And every single market crash, Market Club has got us out before the crash or even corrections. And so what I'm going to do is pull up the S&P 500 to show you the market correction of October to about December 2018. And we can see here, let's pull up a weekly because the weekly's got us out beforehand. And let's pull up a 1-year chart. So this right here was our signal that the market was going to fall. This was on October 4th, our first signal that, hey, the market is about to fall, and it did in fact fall. Then that was followed up by monthly about a week or so later. That is our absolute bona fide all cash signal or changed bearish signal. And what happened? The market did in fact fall. So the weeklies are intermediate signals. The monthlies are long-term signals. Because you do know, you see right here, the market got another weekly green, but immediately after that, got another weekly red. And each time, you can see that Market Club protected its members from losing a ton of money. And before it raged higher up here, it triggered for another weekly. So members, if they were trading a short-term template, they were able to get in and catch some of this upward move. Now what I want to do before I let you go is just kind of cover a couple of trades here. We are on year 3 of our 5-year retirement plan. For those who don't know what that is, it's me reenacting the plan my wife and I followed to become financially free in 5 years or less. So I often call it the 5-year retirement plan. What I really mean by that is financial freedom, because fundamentally I don't believe in retiring. I believe you should be, well, this is my personal opinion, not you, but we want to be of service to humanity until the day we die. Always working, always earning income. But we do believe every individual should pursue financial freedom, to be free to do what they want, when they want, and with whomever they want. So this is year 3. And what I want to do is point out, we started in year 1 with $10,000. And we started this, the inception date of this case study was May 31st, 2017. right? We're now in February 2019 and we're on year 3. So just what? May to 2017, 2018 is 1 year. So you're pretty much in a year and a half to a little shy of 2 years, we've nearly tripled the account value. The account value right now is at $26,000. So nearly tripled the account in a little less than 2 years. Now imagine that. I can promise you there's someone getting their dreams stolen by distraction because they're listening to get-rich-quick gurus trying to turn $2,000 to $1 million in a year. They have those late-night infomercial tactics about how they're the world's best option trader, things like that, right? And you're following their templates, you're losing money. While I'm trying to show people, yes, it's boring, yes, it takes time, but it's a proven wealth-building blueprint I learned from a millionaire mentor. And look, in nearly 3 years, well, not actually 3 years, a little shy of 2 years, we've nearly tripled the account value. And this is version 3.0, right? Version 1.0 was where my wife and I did it. Version 2.0 is where I walked Success Academy members through it. I think it was about 2011 or 2016. But I wasn't really intentional about letting the public know what we were doing behind closed doors. And I was like, people need to see this. And so with this version, I'm more intentional about it. I'm letting the public know what's going on. I'm posting, income summaries online on YouTube. And so again, this is year 3. I don't know if I'll do another one, but I'm showing you here the plan, and we only have 2 more years left. And so it's working as it's designed to do. Now, with that being said, let me go ahead and just show you a couple of trades I made since our last recap. I'm practicing minimalism this year in my trading, which means 80 to 90% of my trading or investments, things I make, will be on pretty much one stock, and that's the S&P 500. So either I will be trading the ETF SPY or index options of SPX. And every now and then I might find a little stocks, but I'm trying to save some time here this year and just focus on one stock, showing people that you don't have to trade a bunch of stocks. You can make all the money you desire just on one stock. All right, so here's some trades I made. These were Buffett strategy trades here. The summary here is I sold stock insurance to someone else, and the total income it brought in just about a week's time was a little over $700, so about $750, give or take. And so this is a trade I make once a week, but it takes 5 minutes a day to manage. So I place a trade is on the same stock. So all I do is log in every day. I pull up Market Club. Hey, does it give me a all go? I place a trade and I'm done. And then every day I just log in. Hey, did it give me an exit signal? If no, I log off. There's nothing else I do. Everything else is automated. My closing orders are all automated. The only thing I need to do is, do I get an exit signal? And that's where I need to take action and close a trade. Next one is a cash flow strategy where we're selling options for income. And so I made a couple of those here, and they brought in here a little shy of 3,000, but that's not all profit. This is what I call a balanced risk approach. Last year, 2018, if you followed the market, we had 2 major corrections in 1 year. The market is on year 10 of a bull market. It's really volatile right now. So I don't trust it. I didn't like losing money in 2018. Well, I made money overall, but I had a lot of trades that were really profitable. And then when the market corrected, all that profit went bye-bye. I didn't like that. So I was like, you know what? This year I want to take a balanced risk approach. The summary of that is, for example, in the Success Academy, I walked them through an example where previously my trade would have had like a $300 loss. But because I took a balanced risk approach, that loss wound up only being $37. And the summary of this is you place a trade, let's say it's a bullish trade. A balanced risk approach is, what if you're wrong? You have another trade that will balance out the loss on your bullish trade. And so it could be one bullish trade, one bearish trade. A bearish trade is where you make money if the stock falls. You could pair this up however you want with whatever strategies. Basically, you just want to balance the risk. So for example, I made a bearish trade last week, a trade where I would make money if the stock market fell in price. And I balanced it out with stock shares I owned, because I was like, if I'm wrong and the market goes up, then I'll make money on my stock shares and it will offset what I lost on that bearish trade. And that's exactly what happened, right? So that's the approach I'm taking this year. So when you see this 3,000, that's not all of my profit. Worst case, what I want to do is break even. But if the market does keep going up, then I might make about 1,000 of that. And then, lose a little bit on the offsetting trade. So that's it. Those are the only trades I made, the highlighted yellow ones since our last recap. Just those cash flow strategies and the Buffett strategy, and that's it. Everything else, I'm kind of sitting tight here. Oh, I did make one 10x growth strategy trade here using Market Club. I'll open a trade on MasterCard here. So this is a bullish trade where I'll make money if the market goes up. So keep your eye on that stock to see if it actually goes up here in the next few weeks. So that is, I think, all I have for you. Again, keep an eye on these, 8 stocks here for the month of February to see if they go up in price. And I'll talk to you in next week's recap where Peter should be back with us. All right, take care. Talk to you soon. Bye-bye.
Okay. All right, welcome everyone. So I am doing this recording without Travis, and he's going to kind of splice it in. This is our weekly recap. We couldn't get it done Friday last week because I was away in Miami at a conference, and my Wi-Fi wasn't working, so we couldn't connect up. So I'm just going to go through real quick my weekly recap. We are going to do another one Friday, so this will probably get out late. That's my fault, so I apologize. But real quick, I'm going to go through my four things. I'm going to cover my Macy's trade. I'm going to cover renting out my stock. I'm going to cover the my SPY Buffett strategy. And then I'm going to cover trading on a small account because one of the members was asking about that. There is a section. I'll get to it. So let's start with my Macy's trade. So let's go to this account here. Okay, so as I'm sitting in the airport in Miami on Thursday of last week, I'm reading a book. I'll put the description in the link of the book and a place to go get it at Amazon. It's a fantastic book. I got it on my Kindle. And I was reading it. Anyway, it's about losing money. It pretty much just emphasizes all the things Travis has taught us about risk and focus on risk. But as I'm reading this, I realized that, in the book, the author talks about, I think it's 3 or 4, you're one of 3 or one of 4 people in a stock market when you're trading. You're either a speculator, you're an investor, you're a trader, or you're a gambler. So it is 4. And when you're a gambler, you're allowing emotions to be in the trade, right? So we always talk about that. We come up with a trade plan and we follow that trade plan. It takes the emotions out. And I realized I'm the epitome of how not to do it with my Macy's trade. So I decided enough is enough. I wish I decided this a long time ago, but any of you guys that have been following me, I was assigned Macy's at $39. So I had to buy 100 shares at $3,900. And I was in my last weekly recap, I said, I'm just going to, have to wait until Macy's comes back. And that's when I realized, well, now I'm no longer trading under my control. I'm trading under the control of the market, and I have zero control over the market. So what if Macy's never comes back? What if Macy's continues to dive? What if Macy's goes out of business? I haven't implemented all the things we teach you guys on this one trade. So I decided enough was enough. I'm going to cut my losses. I'm no longer going to be a victim to the market, which is what I'm being. So what I did, long story short, I sold a $26 call option. That's going to be a $1,300 loss. And I reflected it here in my spreadsheet. So you see this number here. This is what I'm anticipating. I'm going to get called out because Macy's was going up. It's in the money now. So good chance I'm going to get called out. That's what I want. I want to get called out. It is going to be a loss. And you can see my overall return now is $1,020, which isn't good considering all that is my deposits, right? So basically what I am going to do is I'm going to take my loss that I get from this trade and I'm going to dump the money in. So $1,300. That's what I'll be dumping into the account. I'm going to do this after taxes because I don't know what my taxes are going to look like with the way anyway, long story short, that's what I'm going to do. This will then free me up to trade this account the way we're supposed to trade it. And I'll make the money back. Lesson learned. $1,300 lesson. Okay. Moving out. Renting out my stock. So let's go to AT&T. I'm going to bring up my account here. You can see I own 1,500 shares of AT&T, and I'm just renting them out. Now, here's an interesting thing. I talk about this, Travis has talked about this. You see these percentages, profit loss percentage. I like this little category here because it tells me, it does the math for me. Whenever I sell anything, whether it's a credit spread, if I'm selling covered calls like here, the only time I don't do this is with a cash secured put because I'm selling a cash secured put in the hopes of being assigned. But anyway, when this hits 80%, I buy it back. So you can see these have a lot of days, all these trades, right? 136, 164, 346. Well, ironically, with AT&T, actually, let me go to my spreadsheet. It'll be easier to see this. Let's go to this account here. You can see, well, I had them all. See, here's where I sold a lot of those, right? And there was all my profits. I purchased a lot of them back. You can see the purchase backs right here. This one cost me $12. This one cost me $8. This one cost me, these 5 cost me $30. And then the reason I do that is because then I just turn right back around and rinse and repeat. I don't really want to get rid of AT&T because if you can see, the dividend paid out this quarter. So basically that's what I'm doing. That's renting out your stock. I manage this so I don't get assigned. But here's the best part. This is kind of the beauty with when this works out well, when things go your way. I don't have to necessarily manage it because you can see my cost basis for AT&T was $32 and I'm renting it out at $33. So I do have some rented out at my cost basis, but the others are rented out more. So once this gets to 80%, once I can go into my account, once I see, so let's look at this one. This is a June 19 $32 call option. It's at 24.56%. Once that hits 80% profit for my credit, I buy it back and then I just go down the list. So for me, it's kind of simple. I just type in here, and your option chain is going to show all your positions down here. You can see all my positions. So if I bought, let's say I'm buying this one back, I just go beyond this one here. So then I would go to the next one in line. And by this time, there will be more here. But right now, if I had to, this is where I'd go to. Why do I do it that way? Because ultimately, I don't really want to sell out of AT&T, but I'm just generating more and more revenue every month on the stock. So if we go back to my spreadsheet, you can see, so these are my December, January trades. I didn't really do much on this account. It shows a loss. It's only a loss because I bought some SPY call options here. So if SPY keeps going up, this will no longer be a loss. You could get rid of this. If you get rid of this, you can see I would have made $331 plus whatever those call options will pay out. So it's not really a loss. And it was purchased with money I got initially it's not even on the spreadsheet, I don't think. Yeah, there it is. Yeah. So now, yeah, there you go. It was paid initially by these 2 transactions here. That and $300 of my own money. So that's how that played out. So that's my renting out my stock. I kind of just covered my Buffett strategy. Right now I just have one on, but I'm going to do more of these. But you can see I have a 220 put here, cash secured put. It's got 346 days. And there's my call options. I have 2 of them, but you can see up here, I have a close order for one of them. When I hit a $14 limit, it's going to sell one of those out. And then now what the other one that's left over is pure profit, right? So that's the Buffett strategy. Trading a small account. Okay, so let's go back to that now. Once I unwind my Macy's trade, a buddy of mine was like, but if you have a $5,000 account, how do you trade on a $5,000 account? And what I found the safest way to do for me was vertical credit spreads. Now here's the caveat though. Sorry if you hear my phone going off. Not vertical credit spreads on stocks. I'm doing them on ETFs. So let's go out to SPY here. I'm on SPY. Let's go 30 days out, 30 to 45 days out. And that's what we generally want to do, 30 to 45. If you want to do longer than 38, you can go to this weekly here. Go to the 45s, right? And you can sell. Actually, no, I don't want to do the weeklies. I don't like the way the numbers come out on the weeklies. So I'll do a 38 here. And let's just change this to just 12. I would sell this one here, right? It's at the money. That's how I'm selling them. And now on a $5,000 account, let's go back to my spreadsheet and I'll show you this real quick. On a $5,000 account, I got my 210 formula up here, right? So I can only risk 115 with a max of 578. So I can only have 5 trades at $100 out at any given time. So I will do SPY. I won't do DIA because DIA has a larger spread between strikes, so I can't afford it. But I'll do SPY, I'll do QQQ, I'll look at IWR, IYM, all the ones, or IWM, all the ones that Travis gives us in the training. And I'll look and I'll place 5. So let's just kind of show you what that would look like. If I did 1, because that's a $100 strike, that's a $500 strike. So things have already changed. Sorry. Right? Yeah. Oh, I got the wrong one here. Delete that. Not sure what I did there. There we go. Okay. A 271, 272. If I sell this and we hit confirm and send, you can see I'm risking 39 or 61 to make 39. But remember, my risk can be 100. So I can edit this and I can do 2 contracts here if I want. Right? Because now I'm going to be within my parameter, just slightly over. Okay. So I'll risk 120. Now, best case scenario, let's say they work out for me, or let's say 3 out of the 5 work out. And I'm keeping these numbers the same, like we teach everyone. So 3 out of the 5, that's $240 a week. Right. So I was just showing my daughter this because we were talking about it. If we look at, you know, what kind of, that's about a 1.6% return every month. What did I say? 240, right? It's a 40. Okay. It's a 0.4%. Sorry. It's a 4.8%. That can't be right. I got to do it again. But, when I was calculating this out, I looked to get a 1 to 2% return on my money every month. And if some months are going to be great, some months aren't going to be great. Some months you'll have 5 winning vertical credit spreads. Other months you won't have any winning vertical credit spreads, or you have 2. But you can, the main point behind this is, how do you trade a small account? There you go. You do it on the ETFs that we've given you guys. I'm not risking a ton of money on this account. I can only risk $100. And if you look, and if I really want to be safe, I don't have to risk the full 100. I can risk just $61. If everything works out, I'm going to keep about 20. I'm going to keep close to 30 of that because I'm going to sell it. I'm going to buy it back at 80%. So it doesn't seem like a lot, but $39, $40 times 5 trades, you know, that's $200 a month. If 50% of them win, that's $100 a month, you know. So on a $5,000 account, $100 a month, you increased your $5,000 account by $1,200 a year if you do that every month. So that's it. That's what I got. I'm not going to cover what I'm going to be doing because Travis and I will do that on Friday. But that's my weekly recap. Went way too long. It was supposed to be shorter, but you guys take care. Sorry if it was late. My bad, not Travis's. But I will talk to you guys next week. Take care.